There's an interesting development with WLFI, with the World Liberty Financial Token. It seems like there's a rotation of investors happening, as in at the beginning with the ICO, it was a lot of retail investors that bought in. Now the retail investors start to sell off and we see accumulation by the institutional investors. Maybe this is an opportunity. Let's have a look at the data most people are not considering. Now here's what I mean. I've published several videos on World Liberty Financial on this channel. And at the beginning there was so much attention. Have a look. The average video is here in gray and that initial launch video got way more views. But since then, it pretty much died out. We continue to see slightly above average attention. But now recently, the last two videos, they're not dying down that much. They get found via search. So it's not anymore hype. It's not anymore just video recommendations and trends that are pushing the traffic. This is proactive searching. And there's a very good reason to search for WLFI now. Because when we look at relative valuations, it seems like the token might have just bottomed. Here's WLFI relative to Bitcoin. Here we slightly fell below the support. Here is WLFI relative to Ethereum. It's slightly above. But when we compare the World Liberty Financial Token to the others market cap, so to the market cap of all of the altcoins that are not in the top 10, then interestingly enough, we bounced off exactly the support that was created a bit over 1 month ago. Now we have to wonder, why is the token recently in the last few weeks underperforming the rest of the crypto market? Where is all of that selling pressure coming from? It can't be tokenomics, at least that's the official story. The token supply has not expanded since launch. Unfortunately though, there is a bit of a problem with those official metrics because especially for World Liberty Financial, we had a lot of over-the-counter deals. We had a lot of sales of the token to other institutional investors where we don't really know officially what the unlock is. We had a very similar situation with Mantra DAO, so the Ohm token. The token out of nowhere suddenly crashed by more than 90%. While previously it tended to go up. And the reason for that price development was over-the-counter deals. So third parties bought the Ohm token over the counter, so off of any exchange. They got this from the team with a vesting unlock and they had to use the proceeds to buy up the token in the meantime on the open market. So the price went nicely up, but then when the unlock happened, those over-the-counter deals completely imploded and depressed the price. So the OTC counterparties were not very smart in offloading their Mantra DAO. It seems like the market has learned from this. And so there is a potential that this could be hidden OTC offloadings. There are all those funding rounds for World Liberty Financial, all those institutional investors that put in some money. And while this is a logical explanation, I actually don't think that that's what's going on with WLFI. What I think is simply that the attention among the retail investors is dying down and that retail investors simply give up. They're selling the token to potentially buy Bitcoin, Ethereum or Solana. The token is highly manipulated. Just have a look at the number of holders. On the left side, we've got the number of wallets with at least 5,500 WLFI tokens. That's roughly $1,000 worth of the token. In the middle, it's $10,000 worth of the token. On the right, it's $100,000 worth of the token. All of those holder graphs look highly unnatural, but at least in the recent past, it seems to be a bit more reasonable. Let's just zoom into the last month. Again, the same kind of wallet holder thresholds. And again, here's what I think is going on. The small retail investor tends to exit the token. Even the medium-sized retail investor is exiting the token. But the whales, they tend to just keep on holding. They are not exiting in aggregate. Have a look at the number of new wallets that interact with the token on the Ethereum chain over time. Again, it's simply the attention that's dying down over time. Besides the spot market, we've also got the levered bets on the price, the perpetual futures, and this is usually where the short-term price action gets determined. In the last 24 hours, we had 113 million worth of trading volume on Binance on the spot market. But on the perpetual futures market, we had more trading volume. So really, price discovery happens on the perps and then arbitrage bots potentially balance that out on the spot market. And so most people that bet on the perpetual futures tend to bet on rising prices, for World Liberty Financial. So the funding rate tends to be positive most of the time. The longs have to pay the shorts to get more price exposure. But have a look at this. The open interest is declining. So there are less and less bets on the price. And especially the trading volume is declining as well. So the whales are holding on tight, but attention and trading volume and the number of retail investors, that's all going down. And that is very likely the reason why WLFI went down. But at some point there has to be a floor, right? Trading volume can't go down to zero. There will always be some activity and we might be very close to that bottom. Again, in relative valuations, we are already extremely low. And then the question is, what could potentially bring the price back up? Potentially by 25%, maybe even 35%. I think it's probably some kind of announcement of a newly issued product. The team talked about a dedicated debit or credit card using USD1, right? So that's a stable coin that World Liberty Financial. But it could also be any other product. It could be the lending and borrowing platform. It could be the dedicated exchange. We don't know. But at some point, all those institutional investors also want to get their money back. And for that, it needs some positive news. And I don't think we have to wait too long for those positive news to come. I don't think that WLFI will crash all the way to zero until the team does something. It seems like the team still tries to promote the project. There had been a token 29. Donald Trump Jr. personally came to the conference and tried to push the project higher. Now, I try to be as objective and as realistic as possible on this channel. I try to not just sell the greed, talk about 100 or 1000x cryptocurrencies, where then in the end, most people end up losing their money. This is what I don't like about the crypto space, especially on YouTube. Here is a possible 100x crypto, or over here, Plasma going to the moon with 100x, or here even a ranking from 10x all the way to 1000x. The problem is that most people get burnt with content like this. They're hoping for the 100x, they put in all of their savings and then that money is gone. Here's the sad reality. The vast majority of altcoins is just going down all the time. This is an overview of smaller altcoins and their performance in the last year. The reason for the underperformance is because insiders and early investors and the team, they get token allocations over time, and that increases the supply. The price is a result of supply and demand. And when the supply is just going up all the time and the demand cannot catch up, which is true in the vast majority of cases because of ever increasing competition and because our supply unlocks are also so extremely aggressive. Because of that effect, that's then the reality. That's why most altcoins do worse compared to Bitcoin. So this is an example of DYDX. That's this chart over here, right? The supply development. This is DYDX relative to the Bitcoin price. This is not pretty, right? This is an underperformance of 99%. And while it might not always end up with minus 99%, many altcoins still end up losing. Owning a diversified portfolio of assets where the insiders cash out all the time is a bad idea. But it's a good idea to do the exact opposite. So instead of buying DYDX in this example, we can do this here. This is now the Bitcoin performance relative to DYDX. So we bet on rising prices of Bitcoin and at falling prices of DYDX at the same time. So in this example, since the beginning of the year, that made 210%. The performance over the last 2 years is plus 1,300%. So this is where we can find the 10x returns, or at least the outperformance over just buying and holding Bitcoin. We want to work with the market structure. The market structure is against the retail investor more often than not. Again, most altcoins tend to do worse than Bitcoin and Ethereum most of the time. And we don't even have to be afraid of so-called altcoin season, right? When the others' dominance went up by 67%, at the same time, this relative valuation still didn't go up. So the others' dominance is just a measure of market caps. It's not a measure of price developments. And when market caps stay stagnant because the price gets cut in half while the supply doubles, this this is not reflected in the typical altcoin performance charts. I've been following this strategy for the last 4 years. So this is a monthly return chart. Had I just dollar cost averaged into Bitcoin, I would have gotten the line in gray. But because I also bet on falling altcoin prices, I got the return in black. And this is really how we make money in crypto. It's not about finding the next altcoin. It's not about hitting a home run. It's about long-term compounding capital faster than the average. It's about being on the same side as the small circle of insiders. Basically flipping this chart around. Everything that's red here becomes green. Everything that's green becomes red. So the vast majority of our trades end up winning. The strategy might not be as straightforward as just buying an altcoin, but it's also not too complicated. There's only 2 videos that are really important. It's this one over here, using perpetual futures to bet on relative valuations. And it's this one over here, probably even more important, risk management with relative valuation bets. The first video is 34 minutes. The second video is 28 minutes. Once you've watched those 2 videos, you know exactly what to do in order to get this kind of performance. And I'm so certain in the strategy that I will send you my favorite trade directly after joining the premium membership here. So you will get my favorite trade. And if that favorite trade is not making money in a span of 1 month, so you're holding that trade for 1 month. If you're not in the green with that trade after 1 month, then I will refund you the membership fee. So really, you are not risking anything. After joining, once you've watched the 2 videos and you've opened the trade that I will share with you, and you are not making money, you just get the $125 back. If you do make money, of course, that's great. Then you can just continue copy trading me. I share every single trade in real time in premium as well. A link to premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.